Hello, everyone. A very warm welcome to you at the 8th edition Great Indian Family Office Promoters Capital Investment Summit 2026. I am 𝐼𝐚𝐦𝐤 𝐻𝐿, the Senior Conference Producer and Program Head at Transformance Forums. And today I'm joined by Ms. Preeti Chheda, CFO at Mindspace Business Parks REITs and Executive Committee Member at Indian REITs Association. Hello, Ms. Preeti.
Hi, thank you so much.
Would you like to introduce yourself?
Yeah, absolutely. So firstly, thank you for having me here. I'm Preeti Chheda. I'm the Executive Committee Member of the Indian REIT Association. Just to give a quick background about Indian REIT Association, which started about 2 years back under the guidance of SEBI. And our entire motto has been, how do you promote REIT in India through awareness, policy advocacy, and also build a great governance structure around that. And I think we've been doing a wonderful job in terms of creating that kind of awareness and growing the product. Besides that, I'm also the CFO of Mindspace REIT. That's the second REIT which happened in India, managing about 50,000 crore of capital.
Okay. On this note, my very first question to you is, are family offices in India increasingly viewing REITs as a strategic core allocation or still as a tactical exposure?
I would say that family offices came in a little late in the REIT journey. So far, it's been a 7-8 year journey for us as the first REIT happened. So initially, it was more FPI product, and then eventually Indian institutional investors started coming in. I would say family offices have come in the last 2 to 3 years. Of course, they were there at the very start also, but the amount of investment you've seen in the last 2 3 years, that's not something which you had seen in the early stages. I think now family offices have actually understood that these are the instruments which are in a way balancing volatility at the same time giving the expected returns. Like for example, in the last 5-6 years, on an average, REITs have given 15% plus returns with moderate risk. So that's something which I think family offices are realizing more and more. So I would say this is more strategic investment and not literally a tactical investment.
That aligns the context really well. I have a second core question for you. Are family offices gradually shifting from direct commercial property ownership to listed REIT exposure?
Yeah. So historically, obviously, family offices have a lot of investments on the real estate side. And obviously, since REITs were not existing, it was all in the physical real estate. I think that still continues, but I think their investment are also now moving to REITs because REITs are in a way, I would say, complementing, so to say, on the hardcore commercial real estate. Let's just say for a REIT, you need rent generating income. Those are the places where REITs come into play. If you're doing a hardcore land investment, so that doesn't qualify under a REIT. So those kind of investment will still continue for the family offices. But where they're looking at rent generating income, REIT actually offers a very good alternative.
Absolutely fair point. Yeah. From a governance and transparency standpoint, how do REITs compare with privately held real estate assets for family offices?
I think the whole REIT regulation that has added so much of, I would say, investor trust. The whole journey, if you look at the REIT journey, it's been only 7 years since the first REIT has got listed. In 7 years, I would say we are about 185 million square feet in the REIT. We have almost between 1,75,000 of market cap, which is getting managed. Assets over close to 3 lakh, being managed between all the REITs. We have another 6th REIT, which is just on the IPO now. The very fact that so much of investment has come across all sets of investors, so whether it's FPIs, you have mutual funds, insurance companies, family offices, pension funds, and of course, needless to say, retails, HNIs. Now, the only reason we have seen so much in such a short time, it's because of the regulation has been so robust, and it is actually done on lines of global regulations. So if you compare Indian REIT regulations to any global REIT regulation, they are actually at par. And that's one reason it's attracted so much capital. So I think from a governing standpoint, you can't have a better product than REIT.
Thank you. Thank you for breaking that down. How important is liquidity in influencing family office participation in listed REITs?
I think REIT actually covers the gap between physical real estate and liquidity. For a physical real estate, for you to liquidate, obviously would have taken months together. Now, in that case, you have a product which is actually allowing you to liquidate your instrument like in a click of a button. It's just whenever you decide you want to sell, you sell. And I think, of course, for somebody to do a very large trade, of course, liquidity still remains some bit of an issue, because to find that large buyer or a seller gets difficult. But otherwise, if you want to do a couple of crores, I don't see a challenge at all. You have exchanges as platforms available for you to easily transact. So actually, I feel real estate liquidity is getting addressed by REITs.
My last closing question to you is, with India's growing Grade A office ecosystem and GCC expansion, are REITs well positioned to attract more family office capital?
I would say as REITs keep growing, and as you're going to see more and more GCCs taking up. In fact, GCCs have been one of the key contributors to the growth of REITs in India, because if you look at our portfolios, almost 50% of our portfolios today are housing GCCs. And as GCCs are growing, the portfolios are growing, the growth is actually in a way attracting more and more institutional capital into these instruments. So if you tell me, yes, is there a correlation? Yes, GCCs are contributing. Not just GCCs, I would also say the Indian manufacturing sector is also now contributing a lot to the general office demand. Because if I were to look at the demand maybe 6-7 years back and now, the leasing that we are doing, the contribution of Indian corporates to the overall portfolio is only getting better. So GCCs, Indian manufacturing, because of the thrust which the government is giving on manufacturing, and as manufacturing is also growing, we're seeing a lot of domestic tenants also taking up spaces. So I think all of this is actually doing well for the Indian REIT story. And if REITs start growing and giving double digit, you've actually seen in the last, I would say 18 months, REITs have actually grown double digit in terms of the NOI. And if this is the kind of growth that REITs are seeing, then obviously it attracts every form of investors, and family offices are no exception.
On point. Thank you so much, Ms. Preeti, for sharing your insights with all of us. It's a pleasure to have you with us.
Thank you.
Stay tuned to know more what's happening in the Family Office Decision Series by Transformance Forums. Thank you very much.